you've got a nice little bear market bounce in the US anyway. It's a very unusual position to be in, standing here with an earnings yield in the US of 5%, while the rest of the world is yielding you 8 or 9. And those are the facts. I mean, the US is on about a 20 multiple.
Yes.
We're on a 10 or 11 multiple. The US is on a 20 multiple with inflation at what, 8, 9%. That's not particularly pleasant place to be. Meanwhile, you're barely getting a clip above inflation with an investment-grade US corporate bond. So there's lots of anomalies in valuation terms, mostly sort of west of where we are. Meanwhile, rest of world doesn't look unnerving, particularly European equities, rest of world equities, UK equities even. You don't sit there with your head in your hands saying no value. There is. And that comes through in conversations I have. So if you're doing a regional thing, it's definitely, I perhaps go somewhere else on the basis of fundamental valuation. What Karen just said about, no one's really quite clear about the direction. I mean, you've got these complete anomalies going on. You have got full employment, or anyone who wants to be employed. Put it another way. You've got inflation still sticky. That is not a great shock. I don't think the supply chains have sorted themselves out particularly. And the service sector definitely has supply issues. And they're not going to lower their prices. They want to get back the 2 years they lost. If you're a restaurateur or a airline or a travel company, you're going to make your money back. So why anyone thinks inflation has a direction of travel that's deeply south, I'm personally not buying. So you leave yourself in a situation where cash yields above bond yields. That's awkward. That's not ideal, is it? And then US equities do, in any measure whatsoever, and there'll be people of no doubt a certain ilk of my age coming on here saying to everybody, they just don't represent a really very decent value. Doesn't mean they can go up and down. Doesn't mean they can go up a bit. Yes, possibly. Does everyone want them to go up? Yes. But if you do what I do, draw a map of fundamental value and where you want to start, you wouldn't particularly want to start here in the US.
Peter, the problem is the data's not weakening. Is it? It's not weakening in the way that the Fed anticipated. I mean, the ISM's on Friday. The new orders component in that ISM was 62.4, which suggests that there are a lot of business people who are still pretty happy about the environment that they see ahead of them. The labour market, we know, still looks fairly strong. And yet Friday, the 10-year yield dropped below 4%.
Yes.
Which again tells you that nobody in the market believes the Fed commentators. They think the supply side is fixing itself.
Yep.
So
break-evens are what, sub 2 now. So
it's difficult to walk away from the market when you've got those kind of numbers.
But the long-term inflation numbers still, there is this amazing belief in people's heads that we're going to have inflation sub 2% again. Break-even inflation rates are telling you that, and that's, I think, what the bond yield investors are still trying to key off. Plus, a lot of bond managers I talked to, particularly, I think I was on the show last time in December, saying, "Watch bond yields; they're not going down." Well, they haven't gone down; they've gone up, which is completely contrary to where everyone expected them to be. And I think that's a lot of its positioning. A lot of people are all in on the back of the idea that we're going to have this recession, a significant slowdown, lower inflation. Bond yields are going to go lower. Well, the inflation thing is ticking down, but not as quickly as people anticipated. And by the way, I always say to anyone who is desperately bullish on growth, OK, let's just say we do a 2% growth rate next year. Where's the labour force coming from? If you do pick up, who's doing the jobs? Where from shall you find these workers? So I think that's what the market's grappling with is, even if we did have something close to a soft landing and then a pickup, where's the slack in anything? Where is the ability to cater for that? And I just think that's the challenge for the next probably few years, actually. I don't see that changing.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.